Assalamualaikum warahmatullahi wabarakatuh. Hello everyone. How are you guys? I hope you are all healthy. So, on this occasion, I am Alfina Nurma Nadya will convey about difference and similarities in Islamic and conventional baking. Islamic and conventional baking. Surely we often hear it, right? Well, the part that I will say among the terra, deposits, and financing investment. Number 1. Deposito. In similarities, deposits are collected from several underboard type of institution for reward, irrespective of being is operating under a conventional system or Islamic system. Conventional and Islamic bank. Conventional bank, the different lines in agreement of reward is fixed and predetermined. Return is higher on long-term deposits and lower for short-term deposits. And in Islamic banking are accepted through musyarakah and mudarabah, where reward is variable. Higher weight for profit sharing is assigned to long-term deposit being available to bank for investing in longer-term projects yielding superior return, and lower weight for short-term deposit which cannot be invested in long-term projects. And in sharing of risk and reward, in conventional bank, total risk is borne by the bank and total reward belong to it after servicing the depositors at fixed rate, while under Islamic system, risks and reward both are shared with depositors. And in Islamic banking, reward of depositors is linked outcome of investment made by Islamic banking and will be able to collect deposits who can establish trust in the eyes of mass, hence leading to optimal performance by financial industry. Number 2, financing and investments. The second phase in saving mobilization process is extension of credit facility of business and industry for return. Both types of institution, Islamic and conventional, are providing financing to predictive channels for reward. The difference lies in financing agreement. In a conventional bank, offering loan for a fixed reward, and Islamic bank cannot charge interest, can charge profit of the investment based in interest on loans. In conventional banking, there are 3 types of loans are issued to clients, including short-term loans, overdraft, and long-term loans. And Islamic banking cannot issue loans except interest-free loans. Example, cars hasna. For any requirement, however, they can do business by providing the required asset to client. In overdraft or credit card, similarities as for facility of financing. In conventional bank, credit card provides dual facility to customers, including financing as well as facility of plastic money, whereby customer can meet his requirement without paying cash. And Islamic banking form of murabah. However, facility to shop or meet requirement is provided through debit card, whereby a customer can use his card if his account carries credit balance. In interest or profit, a customer is charged with interest once the facility availed in conventional bank, and in Islamic bank, under murabah, only profit is due when the commodity is delivered to customer. In charge, in conventional bank, furthermore, in case of default, customer is charged with further interest for the extra period, and Islamic bank, extra charging is not allowed under murabah. In the rescheduling, customer can avail the opportunity of rescheduling by entering into a new agreement to pay interest for extended period in conventional bank, and in Islamic bank can claim only the original receivable amount agreed in initial contract as per facility of financing. And in penalty, conventional bank as income, and Islamic bank either it will go in charity. Short-term loans. In conventional bank, to meet working capital requirement of RIM, an Islamic bank inventory investment through Murabah. In conventional bank, to invest and in inventories and account receivable and meet the expense, and in Islamic bank, as for meeting of day-to-day expense of business by profits is shared by Islamic banking on pro rata basis, and firm seeking short-term facility from Islamic banking has to prove the viability of the project business to the satisfaction of investor, and Islamic bank penalty for charitable purpose. But in conventional bank, penalty as profit. Next, medium to long-term loans. Medium to long-term loans are provided for purchase or building of fixed asset by firms to expand or replace the existing asset. Although financing under Murabah, BMOHL and ISTASNA is very much look like conventional loans with the only difference of provision of asset and not cash to client. However, difference exists in the contract which alter the nature of risk and return. Under Islamic banking, medium term Murabah, BMOHL and ISTASNA, long-term financing is profit sharing under Musyarakah and Mudarabah. Firms have to prove the viability or profitability of the project or business to the satisfaction of Islamic banking to get the finance because risk of losing someone is involved. Next, leasing. Leasing is relatively recent source of financing whereby as a part of an asset is transferred to lease for a great amount of rentals. Under leasing, ownership may or may not be transferred. But if it's under agreement of each other, rental under each other are not due until asset is delivered to lease for use. Second, additional rent cannot be demanded in case of default estimate, a penalty which is not to income. During period of major repair, rent cannot be demanded by EP, and if asset is lost or destroyed, EP cannot claim further installment. Hence, all risks of ownership are borne by EP. Next, in agricultural loans, short-term loans are required by farming for seeds and fertilizer, and long-term loans are required to develop additional lands and purchase of equipment. Normally, farmers return this loan after selling and the finished crops. Conventional bonds are provided credit facility by charging interest. Profit by interest to the farmers under Islam, by Muharabah, Musyarakah, and Mudarabah. In under Islam, cash is provided to farmers for purchase of seeds and fertilizer. In under Murabah, for purchase of equipment, and under Musyarakah, Mudarabah, for development of additional land. Next, house financing. House finance or mortgage is the more secure form of financing. Under conventional system, loan is provided for interest. Under Islamic financial system facility is provided through the mission Musyarakah. Next, investment. Islamic bank and conventional bank. In conventional bank have many avenues including government, security, short-term loans, and money capital short notice leasing companies, bond, investment in shares. Can also create liquidity by issuing the bonds against their receivable. Interbank deposits are also rewarded in the form of interest by commercial banks, and mandatory reserve maintenance with central banks is also rewarded in the form of interest. In Islamic bank, used as name suku or Islamic bonds can be issued against each other receivable if we issue suku to the investor equal to the value of asset, hence ownership of the asset is transferred to suku holders. Not free invest in any equity security due to two reasons. First, halal business of the underlying firm is squared. Second, financial operation of underlying firm should be interest free. And mandatory reserve with central bank if maintained by if but they are not rewarded like conventional bank to interest demand of central bank. And avenues are very limited to create requires liquidity at the same time to earn some revenue by investing in short-term and liquid securities. If this cannot invest in government securities, short-term bonds, bonds, and money is called in short. That is because of interest-based transaction. Thank you for watching. Goodbye.